I'm Charlotte McLeod with the Investing News Network, and here today with me is Fabi Lara. She's an investor and a marketing and IR consultant for public companies in the mining industry. Thank you so much for joining me online today. Great to finally be speaking with you.
Yes, I'm glad to finally be here, Charlotte. Great speaking to you.
Yeah, so as we were saying before we started talking here, we've kind of seen each other around at various events over the years, but we haven't spoken before. So I wondered for those who may not be aware, if you could start by giving a little bit of your background on how you started investing and in particular, how you started getting involved in the uranium sector.
Okay, for sure. So I'm not a typical millennial in that I like to invest in mining due to its cyclicality. And I started kind of early because I started early in business. So I started in business in my early 20s and made it so that my company in the education business basically gave me a really good lifestyle because I had intellectual property and I licensed it out. So I had royalty payments coming in, but I didn't really have to work for that, which was great. By the way, if you can get that kind of gig, I highly recommend it. And so I needed to do something with my time and started to look into investing some of that money that was coming in. And I actually pretty much nailed the top of silver. And by nail, I mean I was buying at the top, which is horrible. But in 2010 and 2011, they were some of my first investments, right? And I obviously didn't know what I was doing, which is fine because it gave me a longer sense of time frame. And it taught me what suited me best. And so after looking into silver, buying into silver and a little bit of gold, I started to look into the miners and started to learn about the cyclicality of the market, how, sometimes it's when it's down, it's really down and you can find companies trading for a cash or less than cash. And then when it's up, it's absolutely, maniac. And I started to invest in some of these companies. Obviously, the first companies that I started to invest in were the most promotional ones. So the ones that were easily found on websites everywhere. And then I started to look into uranium more and more. And I really thought that it was an interesting thesis. And I started to buy uranium stocks. And so that was 2014 when I first started to buy uranium stocks. And, I've made some nice gains. And I like to talk about uranium. I like to learn about uranium. I still consider myself very much a student of the markets in general and of uranium and of mining. And so now I consult with a few companies on how to reach investors like myself that want to understand the thesis and also want to understand where the value is. So that's a little bit of myself.
Okay, well, thank you for going over with that. It's a great origin story. I wonder if we could talk a little bit about, what's kept you patient? So going back to 2014, that's a long time to be in the sector. You mentioned, of course, you've had some nice gains. I'm sure that's helped. But yeah, how have you been patient during that time, especially, during COVID, and we saw all these new people come into the market. And I think there's been a kind of a trend toward people want to see instant gratification when they're trading. So what are your thoughts there?
Yes, I see a lot of impatience in the market right now, Charlotte, but you're completely right. The gains actually made me stick it out. But honestly, it was also the fact that the thesis hasn't played out yet. So something that investors need to learn about the uranium market in particular, this is different to gold and copper and silver. But in the uranium markets, you have the yellow cake that's produced. But that's not the stuff that goes into the nuclear reactors because they have to turn it into a gas called UF6 and then they have to enrich it. And then once you have enriched uranium, you need to fabricate it and then it turns into little pellets. So from, a yellow cake, it turns into a gas, it gets more concentrated, turns into solid, into a little pellet that eventually goes into the actual reactor. That's a 2-year cycle. everything is extremely slow with uranium. And so once you understand that, and then you see that the price to enrich uranium has actually reached really high levels. And now the price of UF6, which is, one step closer to yellow cake, which is the stuff you mine, is, at an all-time high, then it's very easy to see where this is going. Utilities are scrambling to get material that's more processed. And they're actually quite calm about uranium for now. And so that's something that we have to take a look at. They're not market timers, they're not investors. And so the number one thing for utilities is security of supply. It's not even price. That's not the first thing that they look at. And that's where the opportunity lies. And to be completely honest, the reason why I made the gains was I was willing to wait a long time, but I was also looking at companies that look comparatively cheap. So when the market was down, when the prices and the charts looked absolutely abysmal, that's when I bought. And I try to make sure that I buy things that I find that are cheap, and I don't go for the FOMO, for the momentum trades, because I know that timing the exit is very difficult for me personally. And because I stick to a trade for so long, I need to nail my entry points in order to make up for, any sort of mistakes that I predict I'm going to make when I do eventually sell. And so one thing that, I tell people is like, look, you make money when you buy, you don't make money when you sell. And obviously this is wisdom passed down, many generations ago from other investors, and it's still true, even though it's been repeated, it's true. People have to look at what they're buying and ask themselves, is this cheap? If not, then what is the thesis behind this particular investment? Because it's one thing for you to believe in uranium as a thesis. It's another thing altogether to believe in the company that you're buying and in the price that you're getting it for. And so I'm looking at some of these companies, and some of them I'm struggling to make sense of a cheap valuation. Some of them I think are closer to being fairly priced. Now, obviously the uranium investor is looking forward and looking at, $60 uranium, $100 uranium. Some people are throwing, much, much higher numbers out there. And that's the belief, but the price isn't there yet. And so because markets are really messy, I believe there will be a time when the prices are closer to $100 and the stocks may not reflect that just yet. That's when it looks cheap, and that's when you buy. But always, we got to ask ourselves, is the stuff I'm buying cheap enough that it will make sense for when I exit? But also we have to remember, there's lots of dilution in mining. And so sometimes you just hang on to a stock and it gets diluted enough that you don't really see any gains. So be careful out there.
Yeah, this is really good because I wanted to ask you what characteristics you're looking for when you decide this is a company that I want to invest in. And I also wanted to check with you on whether that's changed from when you first started all the way back in 2014 versus today, when definitely the circumstances in the market have changed.
Absolutely. So yes, the characteristics have changed. Back in the day, what I was looking at was companies with resources in the ground, so pounds in the ground of uranium. I didn't mind any jurisdictions, but what I was looking for, because it was a bear market in 2014, I was looking for companies that were not spending any money, which sounds like the antithesis of what you should be looking for. People say about how much money are you spending drilling, are you advancing your projects, etc. When the markets are really bad, you don't want that. You want people to, or management teams, to hang on to their money, to their resources, and just not spend at all. So that's what I did. Now I see a completely different opportunity. So now what I see is that because a lot of those stories that I invested in and those companies have actually appreciated in value, what I'm looking at now are two different things. One is companies, whether they're in Africa or Australia or in the US. I really like the US right now, because of the sentiment change that's happening there. You Google anything with uranium in the US, the last year, and it's really positive news. But companies that are very small, meaning less than 20 million, 10 million market cap, and companies that are likely to have pounds in the ground, but they haven't been able to show us a 43-101 just yet because they're looking at historical resources. Or companies that are quite new with a good team, but their story isn't quite well known or understood yet. So I'm looking at smaller companies and selling some of the larger companies that I hold, and going for the tiny little ones that have a good team, aren't spending a ton of money on superfluous things, but actually need to get their story out there and need to be known. Because I see there are about 100 companies right now in the market, including Australia and the US and Canada, that have some sort of uranium assets. Kind of made a semi-definite definite list because some of them are still popping up, and a lot of them you've never heard of, and some of them have really interesting management teams. So that's where my focus is on. And the other type is actually shells with former mining executives of uranium companies. I just found one actually today. I'm gonna keep quiet. I'm not ready to reveal it yet because I haven't bought. But there is one with two former mining CEOs, very successful ones, that is quite cheap. So shells like this are interesting to me. Obviously super risky, but when they do play out, they can pay out big. Not financial advice, but that's what I'm doing with my money.
Okay, that's really interesting to me because so you're looking at these really early stage small companies. Maybe they're going to make a discovery during this coming bull market. Really interesting to me because I've been hearing a lot of people saying like, okay, the way you should approach this is, just start with the big ones. They already have it. They're going to be producing. So really interesting to see that. Any comments on, those different types of strategies?
Yeah, I mean, I wouldn't be opposed if somebody is into uranium to start out with the big guys. Absolutely. I mean, look at Kazatomprom, look at Chemical. But I think the one thing that people should avoid doing is having a false sense of security when you're buying a larger company. You might be tempted to only hold that company in order to represent the thesis. So let's say somebody wants to bet on uranium and they only buy Kazatomprom. That to me is a little bit risky because, who knows if they have issues shipping out material in the coming months or currently, nobody knows. Or go to Chemical, okay, but is Chemical really strengthening their pipeline in order to, be the producer of the future that they're supposedly going to be? And so I would not be opposed to having, position in larger companies, but I would mix it up a little bit and see what there is out there. I know it takes time, but it's probably a good thing to go for the ETFs if people aren't willing to spend time. So URNM is one that, seems to be quite solid.
Okay, no, that's a great point about the larger companies perhaps offering a false sense of security. So, as you've been saying, definitely your portfolio has developed over the years. I wondered if we could talk a little bit more about exit strategy and how you decide when it's time to leave. Because I noticed you have a tweet just from this week saying that you're selling uranium stocks to buy more uranium stocks. I thought that was also quite interesting.
Yes, it's that shift from companies that I think are fairly priced or close to being fairly priced to the tiny little companies. And one thing that I really want to drive home is the typical uranium investor, just like myself, is a little bit of a gambler, right? We want the gains of the past to repeat themselves. We want to see Paladin that went from 10 cents to 1 cent to $10. Like we want to see that. That's part of the story. And the one thing I will tell people about that is that when the company was very small, at 1 cent, I believe that the market cap was something closer to 1 million or $2 million, right? So my question is, are you hoping to make similar gains with stocks that are now at $500 million? Because that's a completely different story, right? You're already catching the story several years after the fact. And so that's something that people have to calibrate, reality. And the reality is that right now markets are really choppy. Uranium is trading sideways to down today. People, are a little bit lost, but I think they're a little bit lost and emotional because they're not asking this question: is this stock cheap? Right? There's one company that I did really well with that is very close to production, but when it becomes a producer, it's going to be probably close in valuation to another company that's very similar to it, that's already producing, that isn't that much bigger. So if your comparables look like they could be a double or a triple, then maybe you shouldn't expect 20 times your money. So important to note that.
Yeah, and maybe we can talk about where we are in the cycle right now, because definitely we had last year the Sprott Trust launch that seemed to inject a lot of positivity in the market. Over this past summer, I've seen catalysts almost every day. It seems to look really good. And it seems like the overarching theme is energy security, right? So what are your thoughts there? Where do you think we're at just in the overall uranium cycle?
So I used to think that we were going to get a massive squeeze like the last cycle, which I wasn't a part of, but you look at the charts and it was absolutely amazing. And now what you see is a big question mark, not regarding direction. Obviously, I'm still very bullish uranium and likely will be for some time. However, I don't know if we're going to get a massive squeeze just yet, because my thinking is that the demand for uranium will carry on for such a long period of time, and utilities have built up such, a big inventory, that it might be that we just increase year on year on year on year for, quite some time. I don't know. I'm not an insider. I don't trade uranium in and of itself. And so I couldn't tell you what is going to happen regarding that. But knowing when to exit will be very difficult. That is not my strength, in all honesty. That's why, I have to go back to, is the stuff I'm buying right now cheap? And the thing is, people think that because they're holding a stock and they're not buying it or they're not selling, that that it doesn't matter. They're just holding and hoping that things, will get better or worse, whatever the thesis is. Every day you're holding a stock, you're buying it again, because you're not buying something else that could be cheaper than what you're holding. And I don't know exactly when I will exit the uranium space, but I don't believe that I will be exiting until the spot price of uranium is at least above something like $80, because the cost to produce has gone up by quite a bit. And I definitely see more and more and more demand, for the next 10, 5, 20 years, pick a number. And so before we're looking at $80 spot price, then nope, I don't see myself exiting uranium.
Yeah, I think that's an interesting question. Kind of what is the culmination of the thesis and what does it look like? And it seems like there is a temptation for people to compare it to that very exciting last bull market, but the circumstances are quite different now. So, yeah, any other advice for people who are trying to navigate this?
So I cannot even keep track with all the good news that are happening regarding uranium. There are very, very good news coming out almost every week, like you mentioned yourself. And it's difficult to keep track, and it's hard to know what's, signal, what's noise, and what you should ultimately do with your money. So the way I see it is, if you believe that the actual price of uranium is going up, but you don't have time to actually investigate all the different companies, then, be safe, keep to the ETFs. However, if you're willing to study the thesis, then absolutely go on Twitter, look for Professor John Quake's Twitter account and just read everything that he publishes, because he's sort of like the central news of uranium. And just from his feed, you're going to get enough information that, you know, it's going to take a lot of your time, but it's going to be very educational, because, you know, we could be tweeting something regarding the spot price of uranium. We could be talking about the nuclear fuel cycle. We could be talking about, you know, specific companies. And once you get on Twitter and start to listen to the conversation, then you can learn enough that you start to make your own decisions. But if the person's only starting, then it's better to start small.
Right. And I think that, you know, there's all these positive catalysts as we've been discussing. I like to ask people though, is there anything that can throw the uranium story off track? I think the obvious answer is maybe if there's another Fukushima type of accident. Any other thoughts on that note?
Yes, I agree that that is the one thing that could throw things off. And the problem with uranium specifically is that any one nuclear plant around the world could potentially be an issue, right? I did not imagine a year ago we'd be sitting here talking about uranium and talking about a war between Russia and Ukraine with a nuclear plant in the middle being used as a pawn. And right now it seems like, you know, they've shut things down in a safe manner and they're just keeping everything cooled and safe. However, there are many different points of failure that could, you know, bring the whole thing down. Now, will all these countries that really need electricity, you know, all of a sudden cancel all of their plans for nuclear if something were to happen? Would China not double their fleet in the next 15 years because of accident A, B, or C? I don't know. You know, I would probably liquidate most of my stocks, but I don't know if I would liquidate all. I think it could be something that would create a quick bounce, because at the end of the day, this society needs energy and we need more energy and never less energy. There's more people, and with each new person, there's that much more demand on the electricity grid all over the world. You know, this is just a worldwide phenomenon and need. So, you know, I cannot think of anything else with the demand coming from the USA now talking about turning their coal plants into, you know, nuclear sites, which is absolutely amazing, because we're talking, you know, hundreds of potential, you know, nuclear sites. Yeah, apart from that, I cannot think of anything that would derail the thesis.
That's a good point, because you're right. We're in such a different world now that even if there's an accident, which hopefully we don't want that to happen, but even if maybe it's not that devastating effect on the market that we saw before. So I think another point I want to touch on, we've been talking a lot about advice for investors, but as we mentioned, you are consulting with companies in the space. And I'm curious to know what you think that companies should be doing in this market, what they can be doing better, especially in terms of reaching investors and that kind of thing.
Yes, so I think that companies need to just communicate more. There are a lot of things that happen in a company that would help people to have a stronger connection with the management team that are very simple. And I see a few companies doing that extremely well. And if I may name a couple of names, I'm going to name Standard Uranium doing a fantastic job. Also Encore Energy doing a really great job. Something simple as, you know, pictures of when you do site visits, you know, to show, hey, this is us, you know, doing our job and drilling here and there, trying to find uranium, you know, something like this. That's how you start. The other thing I would definitely say is the ability of, not the ability, but the availability of the CEO towards retail investors. I think it's tempting for some companies to just deal with the institutional side, with bigger investors, with accredited investors, and ignore, the people on Twitter, the people on forums and things like that. And those little guys on forums and Twitter, they can do a lot of damage if they, just feel like they're being ignored. They might be actually quite large shareholders of your company, but most importantly, they're usually the flag bearers of companies. There are, anonymous people on Twitter that can actually drive more stock movement towards a company, either to the upside or to the downside. Nobody knows who they are. And if these guys get ignored, I think, some company CEOs will be punished for that. And it's something so simple, just answer an email. That's it. And if the answer to the email that you've received is, I cannot talk about this, that's okay. People just want an answer. They just want to be able to communicate, understand what's going on, and news flow needs to be constant. If there's nothing to report, then let us know what you're working on right now, because at the end of the day, everybody's getting paid. But we want to make sure that the money is going to somewhere that's productive.
That's so true. I think communication is really key. And that made me think of the market as a whole is known for being so opaque. And since you've been watching it for a while, do you think we're actually seeing some good changes there where there's more openness and people can more easily understand what's going on?
I think we're a little bit away from that. I am currently working on some technology to actually bring a lot of transparency to the market. So we didn't even talk about this yet, but there are things being developed right now in the background that will allow people to quickly see the stuff that is public, but they wouldn't otherwise see so clearly right in front of their faces, right? So one of the things that I find is a bit of a pain, really, is when there's a new uranium company. How do you find out about it, right? I mean, company CEOs need to find, channels to engage with and to reach, the final investor. And the thing is, unless you're tuned into INN, and you could easily miss, one or two companies that hop on because there's so many of them. It's great that there are channels like yours that, can showcase different companies and ask questions. But sometimes you miss them, right? And sometimes we miss, interesting companies. And so one thing that we're trying to build is an easy way for people to discover new companies. So, for example, if I own a company ABC, it should make sense that I'm recommended company ABCD, right? So a similar company to that. So that's some of the stuff that is going to be available at some time soon.
Okay, no, that's really exciting. I would look forward to that because it is, as you said, it's easy to miss things if you're not there every single day, just looking so closely. And sometimes that is not really a healthy way to approach investing as well, just to be glued on it. So as we're wrapping up here, we've been talking about uranium, which you were early to uranium. This has been kind of a bit of a buy and hold with some trading in the meantime. I wonder if there's any other sectors that are in that early stage for you that you are interested aside from uranium.
So I think rare earths could be a thing again, rare earths, and there's a little metal called niobium, which I get it. Most people can't spell it or pronounce it. Me too. But it's an interesting metal that makes everything lighter. And when it comes to battery metals, it does apparently a really great job, according to Toshiba, and I think one other company in Japan that has tested it. However, the issue with niobium is the place where I was born, Brazil, produces 95+% of it. So with that production risk, it's not ideal. However, there are places outside of Brazil, for example, in Canada, where you can get niobium. And so niobium is something that I'm looking into more and more closely. And if gold breaks down, as it looks like it might, I think gold is going to get interesting again. I think gold is something that people are not not excited about. I sold all my gold stocks, some time ago. And no, gold is not sexy right now. Let's put it simply, it's not. That makes it interesting to me. My dog agrees. I don't know if you can hear him barking in the background, but he completely agrees. He's golden color. So
No.
gold, I think, might be making a comeback, but time-wise, I wouldn't be dying to get into gold just yet. I would need to see the breakdown. I would need to see, sentiment get even worse than what it is right now, which is pretty bad, but it could become a really, really good entry point right now.
Okay, well, that I would love to see that gold breakout as well. I don't really know if it's coming soon, but looking forward to that if and when. That's all from me, unless there's anything else you want to add for our audience. Maybe let us know where we can find you.
Sure, no problem. So people can reach out to me and follow me on Twitter. I am at the next big rush. I know it's a long name. I should change it, but that's what it is for now. The next big rush on Twitter.
Perfect. Well, thank you so much for coming on today to talk about uranium. I think there's a lot of good information for everybody. Great to hear from you.
Thanks very much, Charlotte.
Very nice. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Fabi Lara.